Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, February 2nd. Before we start, please join me at the Money Show in Orlando this coming Friday and Saturday, the 9th and 10th of February. On Friday, I will present how to buy low and sell high with trend trades. And on Saturday, I will present how to increase your profits trading ETFs. For more information, go to moneyshow.com and click on the Money Show Orlando. And now on to the market. U.S. stocks fell at the open today due to disappointing earnings reports from blue chip companies and a robust U.S. jobs report. The Labor Department reported non-farm payrolls increased by 200,000 jobs in January, above the 180,000 rise expected by economists. Of course, good job reports usually indicate that the Fed is more likely to raise interest rates, so the market gets cranky when it hears these reports. With that in mind, let's go on to look at three charts that could give us some insight into the week to come. Today, as we usually do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 benchmark. Now, the SPY made a closing high back here last week, excuse me, at $286.58, about $28.65 on the S&P 500 itself. That was on January 26th. Since then, as I captured this chart today, the SPY has moved down. We know we've taken a little bit of a tumble this week. When I captured this chart, it was trading at $278.96, slightly below the rising 20-day simple moving average, which is coming in at $279 and change. Now, if we look at this last breakout move up here, I put some Fibonacci lines on it. And we know that the midpoint of this move up here that went from here to here, the midpoint here is at about 276. So that 276 should provide some support to the SPY if it continues lower in the coming week. Of course, we also have support coming in, potential support at the 50-day moving average coming in at about 271. And again, this level of consolidation here at about 268, all of these places should provide potential support should the SPY find it necessary to come back down below toward this 50-day moving average. Now, I would suspect that we'll have a dip here that we can buy. We just want to know where the bottom of the dip is, or at least I do, before I get into new opportunities here. Most of the movers and shakers in the market have reported fourth quarter earnings by now, although of course there are quite a few left in the coming week, but the majority of the big ones have reported. So the market may now turn its eyes to look back toward the geopolitical situation and so forth. Keep an eye though on the SPY, see where it comes down here, where it holds, and where it starts back up, which I suspect it will do in the coming week at some point, or at least by the week after. We can see the RSI here is no longer overbought. It's down around 55 or so, which is actually a good thing. The MACD is also heading south. So let's see where this dip ends, where buyers come in, and then again we can take advantage of some new opportunities. Our next chart today is the iShares Russell 2000 ETF. As I've told you before, in Tony's Market Club, we watch the IWM because it often acts as a leading indicator for the broader market. Now, you'll note that the chart of the IWM looks a little different than the SPY, and the IWM made an all-time closing high back here at $159.96 on January 23rd. Now, if it moves back down, and it has already done so, as you can see, it's already moved down below its 20-day moving average. It's headed down here to its 50-day. When I captured this chart today, the IWM was trading at $154.87. It's just atop the 50-day simple moving average, which is coming in at 154.32 at the moment. We also see a pretty strong trend line here that I've plotted from the beginning of September, and yes, I can draw through this pivot because they're my crayons. I can also draw through it because I've touched another pivot here. So we can see that this trend line is actually a pretty good second opinion to the 50-day moving average, and both of them coming here in the zone of 154 to 155. So the IWM should see pretty good support here. If it should drop below the 50-day moving average and close below it, then we could see it have the power to pressure the broader market a little lower. And now on to our final chart today. We haven't looked at this in a while. This is the Global X Social Media ETF. These represent social media companies around the world. Top holdings are Twitter, Tencent, Facebook, Yandex, and Alphabet. Now, Thursday, it made an all-time closing high of $36.34. And as you can see, the SOCL has walked, for the most part, actually since much earlier in the year, it has walked up its 50-day moving average for the most part. Now the SOCL is poised just above its 20-day moving average at $34.54. I'm going to watch the SOCL in the coming week. I'd like to see if it can move down back down toward the 50-day moving average, the green line, back down toward maybe 34.50 or so. If it can do that and then bounce off this 50-day moving average, I may add shares of the SOCL to my portfolio in the coming week. Now, as long as the SOCL can stay above the 50-day moving average, I'll be in. At any point, if the SOCL falls below the 50-day moving average and closes below it, then I will exit the trade. Okay, let's go on now to next week's, the coming week's economic reports. But first, please join us this coming Monday, February 5th, for our next session of Toni's Market Club. We will talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low priced, high value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you can't attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after it ends. To join and for more information, go to tonismarketclub.com. Okay, in the coming week, there's usually a week out of the month that we have very few economic reports, and this would be that week. On Monday, we have ISM services. Wednesday, we have crude inventories. Thursday, we have jobless claims and our usual nat gas inventories. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.